Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will move to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are the big players in the market, so essentially hedge funds. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong area of previous monthly support, which is now turned resistance. Now, what we could expect in a situation like this is to go for a deeper test of this resistance, meaning that we could expect some short-term bullish price action to be created to go and test exactly the high of that zone, which is usually what the market likes to do. So we could expect short-term bullish price action and then longer-term bearish continuation and a rejection away from this quite strong historical structure level. Going down on the weekly time frame, what do we see? Now, from a weekly perspective, it is quite clear how at the moment the market is bounded in a range. We have the top of the range that is here, that has already been created by these two previous rejections. From here, we had the first rejection, again here, and if the market will go and test again this area, we could expect another rejection to the downside. And at the same time, we have the low of this range, which is currently exactly here. And we could expect the market, if it will go and reach this area again, to get rejected to the upside as it has already been rejected here and again here. So from a weekly perspective, it's quite clear that we are in a range-bound market. Now, usually the best patterns in a range-bound market are W and M formations. Now, we do not have those on the weekly. So from a weekly perspective, we must simply acknowledge that we have a market which is rejecting currently the low of this range. So since usually we get first a test of the low, then a test of the high, then another test of the low, then another test of the high, we could expect bullish price action for a test of the high of the range. Going down on the daily time frame, what do we see? Now, from a daily perspective, things get very interesting because first of all, I did speak about GBPUSD a couple of times already in the past few days. I spoke about it after this impulse. I explained all the reasons for which from here we could expect first this correction and then the continuation to the upside, which is exactly what the market did. Then I spoke about it when we were here and explained all the reasons for which we could expect first this correction and then the creation of a higher high, which again is exactly what the market did. And by the way, I will link in the description these two previous analyses so you can go and check them out for more free education. However, as the market is currently rejecting to the downside after having created this higher high, there is a quite good probability that if the market will successfully manage to create an M pattern, we could have a rejection to the upside for the completion of the M pattern, at least at the neckline. In fact, when you have an M pattern, you would expect at least a rejection to the upside for the completion of the M pattern at the neckline, which is the previous support turned resistance. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the pound. First of all, we have to keep in mind that if we're checking the data for the pound, we are actually already checking GBPUSD because all currencies on the spot are traded against the USD. And if we look at what is going on here with the net positions, we can see a strong increase of the net positioning going from minus 23k to minus 17k. This shows how on the pound, longs are getting added from an institutional perspective and shorts are getting closed. So this is making the pound stronger. Increasing the probabilities that if we will have an M pattern, we could get a potential rejection to the upside for the completion of the M pattern at the neckline. So if we do get the creation of the M pattern, how we could be approaching a potential rejection to the upside. Now, As usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection higher for the completion of the M pattern at the neckline. If you want to learn more, so what I'm speaking about when I say valid entries and these kind of things, I really suggest that you go and check out the transparentfxtrading.com website. Here you have the possibility to get access to the mentorship program completely for free. In it, you will have all my courses with all the rules of the strategies. You also have the possibility to get access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down, you will see that at the moment there is this massive promotion in which you can get completely free access to the mentorship program by following these 3 easy steps. So I really suggest that at least you go and check it out at TransparentFX Trading, and I will see you on it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.